The politics of the digital dollar. Last year, the president signed an executive order declaring that research into a U.S. central bank digital currency should proceed. For those of you that didn't know, central bank digital currencies, known informally as digital dollars, are digital versions of official currencies issued by central banks around the world. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Advocates say digital dollars could make payment systems more efficient and bring about greater financial inclusion for those shut out of the traditional banking structure. But unlike cash in your pocket, digital dollars would be electronically tethered to the central bank. This means that the central bank theoretically could see how you spend your money. Central bankers themselves are saying it, and the way some of them discuss the privacy implications, they sound more than just theoretical. Listen to how the general manager of the Bank for International Settlements, known as the Bank for Central Banks, explains what he calls the key difference between physical cash and digital dollars. We don't know who's using a $100 bill today, and we don't know who's using a 1,000 peso bill today. The key difference with the central bank digital currency is the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Concerns about the potentially Orwellian implications of central bank digital currencies have even been raised by a leading figure of our own Federal Reserve. Minneapolis Federal Reserve Bank President Neil Kashkari has said that every one of your transactions could be monitored with a central bank digital currency. Despite these worrisome signs given off by central bankers themselves, there seems to be a global momentum behind digital dollar research. Right now, 130 countries, representing 98% of global GDP, are formally considering adoption of a central bank digital currency. In this country, President Biden signed an executive order last year that places urgency on research and development of a potential United States central bank digital currency, should issuance be deemed in the national interest. But this march forward in the development of digital currencies is meeting with growing resistance from lawmakers concerned about privacy implications. Speaking at the Family Leadership Summit in Iowa recently, Florida Governor and GOP presidential hopeful Ron DeSantis made the following dramatic declaration: "If I am the president, on day one, we will nix central bank digital currency." DeSantis didn't mince words in his comments on the new mandate, saying, "Biden's central bank digital currency aims to increase government control over people's finances, and we will not allow it." Congressman Alex Mooney from West Virginia is another lawmaker who is publicly against the digital dollar. Mooney recently introduced a bill in the House of Representatives that would prevent the Federal Reserve from even launching a pilot program to test central bank digital currency. Presidential candidate Robert F. Kennedy Jr. has also come out aggressively against central bank digital currencies, stating that they grease the slippery slope to financial slavery and political tyranny. For those of you who put a premium in privacy and liberty, this groundswell of anti-digital dollar activity may seem hopeful, but whether or not it stops the digital dollar machine from moving forward is another story. And we do know better than putting our faith in the political system. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.